ARK Invest CEO Cathie Wood made a bold statement suggesting that Bitcoin is replacing gold as a store of value asset. Wood shared her belief that Bitcoin acts more as a risk-off asset and a flight to quality during times of economic uncertainty. So don't forget to subscribe, like, and share, and let's start. Breaking: January saw Bitcoin's highest monthly volume since September 2022, and here we could see that it is actually accurate like that, but we are still kind of low compared to the highest traded volume as well as it was in November 2021 when we had more than $8 trillion in traded volume on a Bitcoin, while right now we're still at the trillions right there. But we are getting ready to get up to that location in just 1 month once the new bull run starts, and we're still kind of low and really early for the bull run right here. Next up, 28,000 to 32,000 is bound to happen. I'm not a bear, I'm a realist. Prediction below 20,000 level when Bitcoin was at 65k. Predicted 15.5 thousand when everyone started to get bullish at 25k. And you will see 28 to 32,000 sooner or later. That's probably what will happen. What happened in Monero will be happening to Bitcoin too. Remember these charts. And if we look at the chart, we could basically see that the Monero deep down to $106 low from the $160. What happened is actually Binance decided to delist Monero, and with all the other news it dipped down a lot. Next up, what do we have there? As Bitcoin always finds a way to bury its undertakers. Bitcoin the biggest bubble in history, blah blah blah, all the news saying that it's biggest bubble, but we are continuing to grow with those news. Next up, all you need to know: fiat is infinite, gold is infinite, planets are infinite, shitcoins infinite, real estate is infinite, and central banks are infinite as well. And Bitcoin is only at the 21 million tokens. Bitcoin is still in the grid, as we could see, 64 in the grid, and we are still looking for people buying more than selling, and they are preparing to actually be prepared for the massive launch, but I don't think that it will happen, and we will get back to the fear when the price will drop. Also, Bitcoin holdings, the Grayscale Bitcoin Trust 475,000 Bitcoin, MicroStrategy 190,000 Bitcoin, 9 new Bitcoin ETFs, total 181,000 Bitcoin, Tether holdings 66,000, publicly traded miners 39,000, Tesla 10,000, and Block Inc. with 8,000, the biggest holders out there. Next up is owning Bitcoin is in 2024 and 2025 is not the matter of understanding the philosophy and missions and practical application of Bitcoin. It's about understanding basic supply and demand, rapidly decreasing supply, crashing into a spike in liquidity, marketing, and buying. It's really quite as simple as that, and the education gap will be less relevant this cycle because of the perceived safety of the ETF. So the cycle could get more violent as it seeps from the intellectual realm to the animalistic grid level. Bitcoin halving drives Bitcoin scarcity, as this has always been the starting point for the great bull run melting phases, and yet many will be too afraid or are still waiting for lower prices to get in fact. Fact is, we are still in a pre-halving consolidation, and maybe we hit 35,000, but in 6 months Bitcoin price will likely be less than 100% from here. Also, Bitcoin is a tool for saving money. Bank accounts basically pay 0% interest these days, forcing workers to speculate on stocks and real estate just to preserve the value of their savings. These are often doctors, lawyers, pilots, etc., whose professions are in no way related to investing but who have to become part-time investors just so they don't become poor from inflation. On the other hand, the Bitcoin holders live in a constant state of optimism, knowing that the future value of their savings will be more than its current value. Without having to pretend to be an investor on top of their regular job, Bitcoin is not a speculation. Also, Bitcoin statement from the CEO of investment giant ARK Invest: Bitcoin is now replacing gold. ARK Invest CEO Cathie Wood made a bold statement suggesting that Bitcoin is replacing gold as a store of value, and Wood shared her beliefs that the Bitcoin acts more as a risk-off asset and a flight to quality during times of economic uncertainty. Last year, during the regional bank crisis in March, Bitcoin rose 40% while the GCI and the regional bank index collapsed. Here too, regional bank index is on the move, and we see Bitcoin making a resurgence after some correction following the introduction of the 11 ETFs, Wood explained. And Wood also noted that a decline in Bitcoin's value following the launch of the ETFs was due to the anticipated buying before the ETFs were launched, as this was followed by the selling reaction from opportunistic investors upon the news. And Wood shared a chart where Bitcoin is priced with gold, showing a strong long-term uptrend, as he interpreted this as an indication that Bitcoin is in the process of partially replacing the yellow metal. This chart shows you that Bitcoin is rising relative to gold. There is a shift towards Bitcoin now, and we think that's going to continue because there is a much easier way, a less cumbersome way to access Bitcoin, he said. As the Bitcoin continues to strengthen its position in the financial market, Wood's view offers an interesting perspective on the evolving dynamics between traditional and digital assets. That's what we have. Also, Charles Edwards unveils golden Bitcoin buying opportunity amidst Bitcoin halving. As Charles Edwards, a prominent figure in the crypto space, has identified what he deems as the prime opportunity for Bitcoin investment amid the upcoming halving event. According to his analysis, the period spanning from April 17, 2024 to April 17, 2025 offers the most favorable risk-reward ratio for long-term Bitcoin investors. Edwards suggests that during this time frame, the rate of change in the supply growth rate of Bitcoin is expected to decrease by over 4% per month, leading to a phenomenon he refers to as a supply squeeze. As the Bitcoin halving is set to occur on 17 April 2024, the 365 days after the halving offer the best risk-reward opportunity to long Bitcoin historically. So Bitcoin to $300,000, drawing comparison to historical data. Edwards points out that if Bitcoin post-halving returns mimic those of 2020, the cryptocurrency could potentially reach a staggering $280,000 in value within the following year. And he acknowledges that while some may argue that a return of the 2020 cycle were exceptional, he attributes that it was subdued performance due to the external factors such as China crackdown on mining operations and significant tightening measures by the Fed. Also, in contrast to the challenges faced during the 2020 cycle, Edward highlights the favorable condition expected in 2024, as he notes that the resumption of the Fed's anticipated easing policies could lead to a weaker dollar and consequently a stronger Bitcoin. Edward also draws parallels between the launch of Bitcoin ETFs and the historic rise of gold following the introduction of the gold ETF in 2004, suggesting that Bitcoin's smaller market cap presents a significant upside potential. So with his analysis pointing to the potential for substantial gains in the Bitcoin price, Edwards speculates a conservative price target of $300,000 within the next few years. So that's kind of all we got on the Bitcoin so far, and if you are interested in more news, don't forget to subscribe, like, and share for more on this channel. See you in the next one, and peace.